Welcome back to JPX Energy Market Weekly Updates. Crude oil futures were higher last Friday as tight supply outlooks overshadowed economic uncertainty and recession fears. Nonetheless, a late sell-off saw prices retreat more than $3 from early highs, and oil prices remain trapped in a well-worn range since early July, as investors continue to weigh signs of macroeconomic weakness against a tight physical market. Dubai cash stormed higher on the final trading day of September partials, comfortably outpacing Brent gains. Dubai cash for September delivery was assessed around $107 per barrel for July 29th at Asian market close, up $2 per barrel from the previous. While the new front-month October JPX Dubai future contract was down with the paper market and is viewed as a more realistic guide to future market dynamics. While flight prices settle higher, inter-month spread of these crude oil futures retreat from last week's close. On a monthly basis, however, the key first line and third line Dubai cash spread, closely monitored by Middle East national oil companies, averaged $9.19 per barrel in July compared to $7.54 in June, paving the way for yet another hike in official selling prices for September loading barrels. The U.S. Federal Reserve battled to calm inflation with another 75 base point rate hike, and downbeat news on the state of the broader U.S. economy dampened sentiment in the second half of last week. But the focus has also flipped back to supply and demand fundamentals ahead of the OPEC Plus meeting. On the supply side, informal Reuters poll of delegates suggesting the group is planning at most only a modest hike in September output. According to the poll, 2 of the OPEC sources said the modest increase for September would be discussed, and 5 indicate the group will likely keep September production targets in line with August. OPEC's Joint Technical Committee will meet on Tuesday, with the Joint Ministerial Monitoring Committee meeting scheduled for Wednesday. The decision will reveal how the OPEC Plus alliance, particularly Saudi Arabia and the United Arab Emirates, has assessed the market's outlook. The meeting marks a new chapter for the alliance, with the existing deal expiring at the end of August. Even though only Saudi Arabia and the UAE are believed to have immediate spare capacity, OPEC Plus is expected to continue its regular dialogue. At its previous meeting in late June, OPEC Plus ratified previously announced plans to increase output quotas by a combined 648,000 barrels per day in August, which brings nameplate OPEC Plus output close to levels before the record 9.7 million barrels per day cut in 2020. However, according to the group's own figures, output came 2.48 million barrels per day below its collected June production target, with compliance at a record 320%. In particular, Saudi Arabia was said to be close to its operational output limit with regard to long-term sustainable level, reducing the kingdom's flexibility to commit to further long-term output hikes. In the United States, the U.S. Department of Energy announced its fifth sale, which include up to 2.8 million barrels of soy crude and 17.2 million barrels of sweet crude between September the 16th and October the 21st as part of its ever-largest SPR drawdown aimed at reining in gasoline prices, and also share details of its plan to replenish the SPR. According to a new analysis from the Treasury Department, the SPR releases, along with an additional 16 million barrels released by international allies and partners, curb prices at the pump as much as 42 cents per gallon, compared with where they may have soared absent the releases. On the demand side, the U.S. economy contracted by an annual rate of 0.9% between April and June, against the expectations of modest 0.5% gain. This marked 2 consecutive negative quarters of U.S. growth. However, last week's U.S. energy data supported wider sentiment, with the U.S. consumption largely seen holding up and record export levels highlighting global demand. Among the oil product, daily U.S. gasoline deliveries jumped by over 1.2 million barrels per day in a fortnight to July the 22nd, pushing demand back to less than 1% to year-ago levels and wiping off its post-Independence Day hangover. In the Asian market, while gas and thermal remains the main feedstock for power generation, it is reported that the Asia-Pacific medium to heavy sweet crude oil grades have piqued the buying interest of Japanese power utilities during the peak summer demand season, as coal and LNG prices so strong, boosting regional crude oil demand in process. This is in line with the previous expectations of oil and gas switching because of high prices of competitive alternatives. Okay, that's what I want to share with you today, and welcome back next week.